Assalamualaikum warahmatullah and good day everyone. Welcome to topic 3 of Keeping It Balanced short course. In this topic, we will talk about the core of bookkeeping, that is accounting equation. I have mentioned this equation every now and then in previous topics, so you can imagine the importance of this equation in accounting, especially bookkeeping. In this video, I will talk briefly about the role of accounting equation in bookkeeping, somewhat a repetition of what I may have mentioned in previous videos, and how this equation being the foundations of journal entry and how we keep the equation balanced for that matter. As mentioned in topic 1, bookkeeping is referring to keeping of records of economic transactions of a business. This record keeping is important so that, for example, a business knows whether at the end of the day it is operating at a profit or loss. The records also, as mentioned earlier in topic 1, are done in Book of Accounts, where each transaction will be first recorded in journal entry as the language of accounting. This journal entry will let us know what account to be debited and what account to be credited. We do this by applying what we call as double entry system. The debit or credit of an account will depend on element represented by the account. The debit and credit also represent effects to the element, either increasing it or decreasing it. And to ensure that the recording is correct, the increasing or decreasing effect of an element shall be guided by what we call as accounting equation, which must always be balanced after each transaction. Another way of looking at it is, in accounting, we have bookkeeping system, the result of which are the financial statements. In the Book of Accounts under bookkeeping system, we shall have list of accounts representing all elements of financial statements. The changes in these accounts will be recorded based on the journal entries for all transactions the business made. And the way that we do the journal entry for each transaction is by applying double entry system that ensures the balancing of the accounting equation. So that is basically the overview of how bookkeeping and accounting report works. In this topic, however, we will only be discussing the accounting equation, an equation that ensures correct recording in bookkeeping. Before we look further into accounting equation, I want to bring you back to the examples of journal entries that I shared with you in topic 1. That is when Isha invested in his own business, Easy Enterprise, for 40,000 ringgit, and when his aunt Melissa bought some goods amounted to 10 ringgit from Easy Enterprise. In the first transaction, the 40,000 cash is an asset, that is element number 1, and that cash coming from the owner of the business denotes capital, element number 2. In the second transaction, the 10 ringgit cash received from Aunt Melissa is an asset, that is element number 1, and the sale of goods worth 10 ringgit is a revenue to the business, that is element number 2. So from these examples, you can see that each transaction will affect one or more elements of financial statements. The effects will either increase or decrease that elements, represented by debit and credit to the elements. And the increase or decrease of the elements will be guided by the accounting equation, meaning whatever the changes may be, we must ensure that the accounting equation remains balanced. Let me share with you another example of a journal entry. Let's say Easy Enterprise purchased a van from a van seller at 30,000 ringgit. The business only paid half of the price, and the balance is promised to be paid after 3 months. The van newly purchased at 30,000 ringgit is an asset, element number 1. The 15,000 ringgit cash paid to the van seller at the date of purchase is also an asset, again element number 1. The business then owed the van seller the other 15,000 ringgit. This is a debt to the business, thus a liability, and this is element number 2. From this example, I simply want to show you that a journal entry can have more than 2 entries, in this case 3 entries. There are 2 elements involved, assets, 2 of them, there are cash and van, and 1 liability, that is debt, indicated by the creditor, the van seller that the business owed the money from. As you can see, in this example, asset element is affected twice, and that is allowed, we simply record what is transacted. The debit and credit, again, will represent an increase or decrease in the elements involved. And the increase and decrease will aim at balancing the accounting equation. Let us now look at the accounting equation. As I introduced a few times before, this is how the accounting equation looks like. Assets are equivalent to liabilities plus equity. What it represents is the balance value of assets of a company with its liabilities and equity. We can also take it as a total amount of liabilities and equity that makes the total assets. Our aim when recording transactions is to ensure that this equation remains balanced at all times after every transaction recorded. Let me illustrate that to you. From a transaction, when there is a decrease in asset but there's no changes in liabilities, there must be a decrease in equity to make the equation balance. When there is a decrease in asset but no changes in equity, there must be a decrease in liabilities. When there is no changes in asset but a reduction in liabilities, then there must be an increase in equity, again to make the equation balance. When there is no changes in asset or equity, but there is a reduction in liabilities, then there must be an increase in liabilities. When there is no changes in liabilities or equity, but there is an increase in asset, then there must be a decrease in asset. And finally, when there is no changes in asset or liabilities, but there is a reduction in equity, then there must be an increase in equity as well, so that the equation remains balanced. So as you can see, any changes to one element will result in changes in other elements or itself. For equity, we have learned that part of equity is income and expense. So whenever we record an income, equity amount will change. Whenever we record an expense, equity amount will also change. The rule is, whenever we record an income, which will increase the total income, equity will also increase. Whenever we record an expense, which will increase the total expenses, equity will decrease. So for example, if there is no change in liabilities, but there is an increase in total expenses, meaning we record an expense, what can we expect to happen to total assets? Correct, decreasing, because an increase in expense will reduce the equity. Thus, to balance the equation with no changes in liabilities, assets must be decreased. If there is no changes in liabilities, but there is an increase in income, what can we expect to happen to total assets? Correct, increasing, because an increase in income will increase the equity. Thus, to balance the equation with no changes in liabilities, assets must be increased. When there is no change in assets but expense increases, what do we expect to happen to liabilities? Correct, increasing, because an increase in expense will decrease the equity. Thus, to balance the equation with no changes in assets, liabilities must be increased. When I say must be increased or must be decreased, it does not mean that we need to force the amount to be increased or decreased. It simply means that from the transaction itself, it will naturally increase or decrease the elements because the equation must remain balanced. To give a complete equations of all elements, we add capital and withdrawal. Why is it that capital and withdrawals are as if not included in the 5 elements of financial statement? Because they are owner related and not business related, but they still form parts of owner's equity. Only thing, the transactions between owner and the business are not as frequent as transactions between the business and other parties.